Traders, welcome back to another price action trading lesson. We're going to dive deeper into understanding trading ranges, how to identify the health of a trading range. We're going to talk about where to analyze the high probability setups according to price action rules. So the trading range structure is easy for me to identify right off the bat. I can see flat EMA, consistent price swings up and down. I'm following the trend line rule. The channels, they have a break, new extreme, and right now we can observe strong bullish push above EMA. So this means I need to locate a channel. So what am I expecting right now? Well, this channel fits really well. If there's going to be a break for this channel, I expect new high according to rules to be tested. So I'm thinking about second entry long, pull back to the exponential moving average. Can we get it? And market already created new extreme. So there was no opportunity for me to go long. It was so far from the EMA. Now, as you can see, the high of the day important key level is showing some reaction here. But can I sell? I cannot really sell just yet. Why? Well, notice how strong and steep this bullish reversal was. From the very bottom all the way to the top, not a single test of the exponential moving average. It visually looks like a one steep leg working hard. There is no broad and sideways break and a second leg to new extreme. So when you see structure like this, you never know how many pushes higher there's going to be. So you have to be careful. You cannot sell just yet. You need to see push below EMA and a failed second entry long. Okay, that's not happening. Market keeps correcting a little bit. Now we have first entry long, new high, first entry long. I cannot go long just yet. I would need to see this key level proven more into support with second test. The downtrend is in play and market continues working lower and quite significant. Okay, so this is interesting because I can see this move down is much bigger than the initial one. I'm thinking about drawing channel possible wider. Why am I thinking about this? Well, because we are in a trading range and I expect reversal. Remember, we are following trading range rules. We want to buy low, sell high, and most breakouts will fail. And this right here was a failed breakout. And failed breakout can generate strong momentum in the opposite direction. So we're not expecting this bearish trend down to be part of bullish trend to draw correction tight. I'm expecting full-blown reversal. For this reason, I'm thinking about possible wider channel connecting the very first two swings, and let's see if the channel will get confirmed. Okay, we have a short setup here, but it's just a first entry short. Short-term uptrend is in play. You can argue it visually resembles failed breakout out of this consolidation, but because it's not fully confirming the channel, it's only a first entry short above EMA and the short-term uptrend is in play. I really need to see that second entry short below EMA. Can we get it? We cannot. A market already created new extreme. So what I'm going to do, I'm going to mark my new extreme. Now, when I was watching this live today, I also was thinking about making it a little bit wider. Notice how well it fits here. Basically, it's not too distorted. But in order for me to widen it like this, I want to see nice rejection of the EMA and of the key entry point. Micro double bottom can reset. You have a first entry short only. Short-term uptrend is in play. And because there was no rejection, it spiked up, basically looking like a one leg. This was the point where I realized, okay, it's in the middle of the trend range. So I'm not going to be making the channel too broad. I'm going to go back, make it tighter like this, break, new low, fits really well. Kind of like a first big leg down, break, second big leg down. Also, I can make the channel just a little bit wider like this. So at this point, I'm thinking more about possible failed second entry short. Can get a failed second entry short? We can. But the signal bar is bearish bar. I cannot go long above bearish bar like this. So unfortunately, I cannot go long. Failed second entry short. Uptrend keeps working higher. So if you are playing the wider channel, by the time you retrace too much here, you have to adapt because this is a trend range up and down, up and down. So just play the break, new low. This looks like a one leg up. Let's see what's going to happen. I'm going to redraw short-term downtrend. And we have first entry long, pull back, second entry long, counting from this high. And this is not only second entry long. I can see we have small triple test. Now, normally, we wouldn't be interested in taking second entry long below EMA like this, especially when the bias is not fully clear. But because a advanced trader can spot this support area where buyers are stepping into the market, they're holding this level, new high, first entry long, second entry long, combined with the triple test, uptrend is new high. This is decent high probability setup, definitely more advanced. So if you're a novice trader and you didn't go long here, no problem. Only more advanced trader can consider. But price action wise, it makes sense. uptrend created new extreme, so I'm going to mark it. But notice what is happening. By the way, I'm not thinking about selling at all because there is no good key entry point. And now I can see, this is an important lesson we want to talk about today. This trend range is not really healthy. Okay, it's not that bad right now, but it's shaping into bullish imbalance because you can see price action didn't go all the way here. Every single major low is higher and higher. Low, high low, high low, high low. The room at the bottom of the trend range is starting to increase. So this gives you more of a bullish bias. Okay, and when there is a bullish imbalance, you're focusing more on buying. Okay, and the breakout may succeed. So if there's going to be a failed breakout, you're not really fading because bullish imbalance can generate trend breaking out of a trend range. So today's going to be a good lesson. Pay attention to how to recognize bullish imbalance. Now, because I saw price action trending higher like this, even after new high, I redrew channel like this. Now, this channel is not really confirmed. You don't necessarily need to draw it, but I want to make sure I'm not selling aggressively. And combining with bullish imbalance, it makes sense. So I was thinking about second entry long. Can you get it? We have a second entry long here, but it is so far from the EMA. Signal bar is rather neutral, a little bit bullish, but so far from the EMA I cannot take. Even though it worked for a scalp, I just cannot take it. I'm going to redraw short-term downtrend here. Market keeps trending lower. Okay. And price action is correcting higher. So now this is important. This is where a beginner trader can get confused, and this is why it's important to understand bullish imbalance. You can see once again, strong push down, low that is higher than the previous one. Notice how the room at the bottom is getting bigger and bigger, empty room in the middle of the trend range. There is definitely a bullish bias, but it's too early for me to draw a bigger channel because the highs are still static, typical bullish imbalance. You can basically picture bullish imbalance as a form of a very weak uptrend. And the way how you trade weak uptrend is you let the correction to play out and you want to take high lows or failed second entry short after you see push above EMA. So at this point, I'm thinking more about failed second entry short above EMA, but there is no second entry short failure, new low first entry short, nothing, no failed second entry short. Market continues to work lower. Okay, we are trending higher. At this point, I put the support, the resistance a little bit higher. And by the way, this is once again a sign that there's a bullish bias if the resistance keeps going higher and higher. So definitely bullish imbalance at this point. Short-term channel created a break and a new extreme. Two-legged pullback. We have small support, small potential resistance. And now we have technical first entry long, but we have broad double bottom. Combined with the bullish imbalance, we can consider buying, but this is more advanced setup once again. So you have to be pretty much patient here. Right now, not that many easy setups. Just let the price action develop, but it's important for you to understand what to look for and how to navigate the bullish imbalance. So it's okay to be patient. Don't do anything too aggressive. Just be patient. Now we have short entry here, but combined with the bullish imbalance, I'm thinking more about buying rather than focusing on selling. As you can see, another low that is higher. So there's definitely bullish bias. So I'm not going to be fading the breakout. I expect new high for this channel. And notice what we have now. I'm going to draw right now channel to the upside. We have high-low breakout pullback. We broke higher of the small trend range, came back, tested it. This right here is a high-low breakout pullback. More advanced setup. I actually took this setup myself. But because I'm combining, once again, notice, important lesson, bullish imbalance. Lows are higher every single time. We're breaking higher. I'm not thinking about selling. So all the sellers fading the breakout of the trend range under bullish imbalance, they're going to get trapped. And this is a decent high probability setup. And at this point, you can see market keeps going higher. So there is no good long setup. We have a small break new high. And notice once again how far price action is going higher. Definitely the bullish imbalance is kicking in. It's a little bit early for me to think bullish because you have a break new high. Let's see what's going to happen. You have a massive push down. So there is no short setup just yet. And this is going to be pivotal. Because if the trend range is going to hold, we're going to continue working lower. And notice what happened shortly. Price action completely sliced through back above the EMA, retracing the majority of this downtrend. And this was the final piece of the puzzle that told you, okay, bullish imbalance is going to transform into bullish trend. Because you can see we start with the trend range, increase of high lows, and even the static highs are right now forming higher highs. So this is the point where I can finally safely draw and adapt to this broad channel, which normally we are hesitant to draw in trend ranges. But now because I'm trading bullish imbalance, so much empty room, every single low is higher, massive bounce here. You can tell this strong push down completely reversed, the same thing as here. So I'm expecting what? Second entry short failure, okay? I have a new low, first entry short pullback, second entry short failure. So right now we have a failed second entry short. Right now combined with the bullish trend. However, the single bar is bearish, so double bar entry is actually okay because the high is quite close to the high of the previous bar. But because it is not perfect bullish bar, I'm going to mark it more aggressive. Context wise, perfect setup. It's going to be great trap above EMA. And shortly after, we had another confirmation, high-low confirmation of the failed second entry short. This time, great signal bar. You can see the key level still holding, still making higher lows. Great high-low tier 1 signal bar, and market continues to work higher like this. So at this point, what I'm going to do, I'm going to redraw channel like this because the brand new push phase is starting. This is what we call a push phase because it's a correction. There's a push phase, correction phase, push phase. So I'm expecting second entry long at the EMA. Now let me see how the channel is reacting. I actually drew it a little bit wider like this because when I'm watching this channel and analyzing the 10,000 tick chart, the higher time frame, there was no overshoot. So it's okay for me to make it a little bit wider here. So I'm thinking about second entry long. Can we get it? At this point, we can be a little bit worried because the push phase is way too overextended. You can see we're bouncing at the top of the trend channel line. However, this is a new high. First entry long, second entry long brought to like a pullback. I was hoping the second entry long wouldn't form. If I'm going to take a second entry long here, it has to form really great. And notice big bullish bar closing on its very high. Off the EMA, great rejection. At this point, I pretty much had to take it because it formed really great. Brought to like a pullback, short-term channel played out with a break new extreme. This is a great second entry long, high probability setup. Short-term uptrend needs new high. It is at the EMA, part of the big channel. You had to wait a little bit. There was even a high low, but the high low is a little bit doji. If you have bullish bar here, you can take the high low, but on my chart, it's a little bit neutral doji, and honestly, you are supposed to be already holding this trade. But if you have better bar here, more bullish, you can definitely consider high low. Market created the push up. It could have actually even generated a decent runner. And you can see we have overshoot of this main channel. So right now we can expect stronger pullback in the opposite direction, possible even reversal. So you are pausing, looking to go long. This is what price action does after overshoot. So right now I can draw a little bit of a broader channel because the bearish momentum is increasing. I'm going to redraw the short-term uptrend here. We have first entry short, second entry short, but it's above EMA. There's small triple test. This is very tempting entry, but feels a bit more advanced. You can get a lower high confirmation setup. And now we have push below EMA, lower high, confirming the new low, first entry short, second entry short, quadruple test. The downtrend needs to get new extreme. This is great high probability setup. It is quite late, but it is a decent lower high confirmation setup of the second entry short. Great scalp, breaking new extreme indicating end of the bearish trend down. And right now market is trending back up, probably looking for a new extreme of this channel, but there is no momentum. The market is about to close. So when I'm trading bullish imbalance, I'm being a little bit more patient and I'm not rushing too much into looking for setups because it is a very weak version of uptrend. You don't have to be looking excessively for new extremes of these bearish channels because bullish imbalance will take over, and we prefer to take failed second entry short when the correction phase is ending, brand new push phase is starting. There weren't that many setups to start the day with. You have to wait a long time for price action to develop. But right after here, when the price action actually turned bullish, you have few opportunities to take a nice decent high probability setup. and a great lower high to finish the day with. This is great setup, confirmation, second entry short, quadruple test down to this new low. So price action ended up working really nicely. This just goes to show that you never can be frustrated if it feels slow or there are no setups the very first half, because you never know when the market will turn the corner. Price action will become easier to navigate and it will offer many setups. So if you need, I keep saying this over and over again, but this is really crucial. Keep taking those small breaks so you make sure the chain of frustration is not building up and you can keep trading and taking advantage of those good setups. So I'm going to wrap it up and I'm going to talk to you next time. Good luck with your trading.